I don't know if anybody's watching, but it is Valentine's night. If you're watching this, then you've got money but no friends. But that's okay. You're watching Squawk. I'm Bruce Whitfield on CNBC Africa, first in business worldwide. The fact that you two guys are here suggests you've been married for far too long. He said, looking in the mirror. Nice to see you both. Busy week, Mr. Shapiro.
Lots happening. I mean, on all markets, on global markets, on our market, there's plenty happening. We're getting a fair idea of what's happening in the economy through a lot of results that are coming through. Some good, some not
but that's
so
the point.
good.
You said we're getting a fair idea on because of the results coming through. I'm just more confused than ever because there's some good results and there's some horrible results coming through.
I think the horrible results are closer to where I think the economy is going, showing us a slowdown in consumer demand, also a slowdown on the mining and manufacturing side. You know, anyone who's related to manufacturing, mining has come out with some poor results. We've seen Impala's results, which are an absolute shocker. On the other hand, you're getting Group 5, which shows maybe we're starting to see a turnaround.
He's wishful thinking, isn't it, Ian Cruikshanks? I mean,
Not entirely.
one construction company doth not a building boom make.
No, but he may get a bit of support when Mr. Zuma does his State of the Nation address, and I think that is important. Surely he should realise the importance of seeing it happen rather than just talking about it. If one talks to those in the industry, they say they have not even been asked for any project plans. So this is a bit of a worry, but I do believe that it must be on the way for his own future too. And there's nothing that a politician likes more than to ensure his own future.
You're exactly right. Or at least a comfortable retirement. Yes. When we look at recent results coming out, David, I mean, Woolies, you can't fight with Woolies. Impala came out today, Woolies came out today, Chalk and Fromage Blanc.
You've got to be careful, and I think it comes down to the stock market. You can't just say retailers are overpriced. Have a look at that result. It just shows you they're at the top end of the market, they've captured it, they're taking advantage of it and doing very, very well. You can't fault them. And what's also surprising is that they're doing fairly well in Australia as well. And I've been one of their biggest critics on that side. You know, Witchery is no Woolworths. It's an up market, or it's really focused on what young ladies between, I would say between 18 to 30, etc. Very good brand and doing well.
Okay, so not bad for Woolworths in Australia. Woolworths, South African retailers, not renowned for great success in Australia and Cruikshanks, South African companies generally. But we are seeing the trend change a bit. Bidvest is doing okay in Australia. We've got Woolies now doing okay in Australia. Aspen doing very nicely in Australia. Thanks very much. So there is maybe a change in the trend.
It's a possibility. There has to be a groundbreaker. The ground was broken, I suppose, a long time ago, but there has to be a trend change. It may have been starting now. Woolworths don't seem to have the record to say that they're great at putting into new strategies, new ideas, and bringing them through. But yes, it certainly is encouraging to see the broader base that they've developed now.
And of course, we had the listing this week of Sibanye Gold. This was the unbundling from Goldfields. Then they've been in the news a lot this week. We've had results then from Goldfields. We've also seen the chairperson of Goldfields step down, Mamphela Ramphele, ahead of an apparent announcement on Monday. It certainly looks like she's going to be making a big announcement. So yeah, lots of Goldfields news this week. Is all of it any good? Is any of it any good?
Goldfield wasn't bad, and you can understand why they've chosen not to be in South Africa. You know, their offshore mines, their mines outside South Africa did pretty well. Locally, not doing that well. I'm not a Sibanye. There's value there, but it's too small to get very excited about.
Is Sibanye attractive as an investment prospect at all, Ian Crooks?
No.
Why not?
No, the risk is just too high. If it was attractive, why would Goldfields have hived it off? Because they and their investment community, a large portion of whom are offshore, have said no thank you. So that's why I think Goldfields did the right thing. And it remains to be seen whether Neil Froneman has the strength and the courage.
You talked to Neil Froneman. He says this is a share that right now is worth $20. It listed at 13, it then went up to 15. He's going to talk his own book. He's going to talk about it.
Well, he mustn't convince us. He's got to convince shareholders, you know. And Bruce, that's the big. If you look at Goldfields, more than 50%, in excess of 50%, our shareholders are foreigners. Those are the ones you've got to convince, and they're going to say, why are we holding on to this? Whether we've got the capacity locally to absorb those shares remains to be seen. I don't think so. I think that that there's been a complete shift in the way that investors trade here. So I'm a bit dubious. It'll trade. You'll always have the retailers, retail people buying gold shares. It's just been part of our culture for I don't know how many years, 130 years, 140 years.
You don't look at me when you say 130 years.
Well, yeah, I'm nearly up to you here. We've been on the market for well over 40 years.
Ian Cruikshanks, what was Barney Bonato really like?
Bruce, the one thing that stands against it that we're not bringing up is that the gold price is going nowhere.
Yeah.
If anything, as people take on more risk in equity markets, they're shunning these so-called fear assets. So you've seen, platinum 1720, gold 1650. We haven't seen that for a long time.
And I do think that it takes shareholders time to weigh up the prospects, the pros and cons of Sibanye against Goldfields and of the whole Sibanye situation and the risks in that sector of mining. And I think they'll eventually say, gee, I don't know. It's a fair price now. Let's take it. And just take it off the value of our asset holding price.
6% dividend yield on the gold shares is just not good enough to keep
I'd rather buy a company that sells air like MTN and Vodacom. They just sell air. Yes. Whereas the gold company's got to go dig 1, 2, 3, 4 kilometers underground, etc., blast all that rock, and they bring up a ton of rock and they get a thimble full of gold. I mean, crazy.
You've got to be better, easier ways of making money. Okay, easier ways of making money. Banking used to be a great way of making money. Easy money. But this week we see Absa results, profits down 9%. Dividend was flat. There's talk of a special dividend because there is some excess capital. They've got a capital adequacy ratio of something like 17%, which has got to be amongst the best in the industry. What do you make of Absa, Ian?
Interesting. There's the Barclays ABSA deal, and what I think is, you mentioned the cash that they have, that cash pile. Why didn't they pay cash for Barclays' share in their African businesses? I think the reason is that Barclays are saying, we want to cement our control. It's 51%, it's going to go up to 62%. And how do they do that? If they had the risk of taking cash out of ABSA would be stuck, maybe even moribund for a while. But now they're saying, pay us in shares, and that cash pile is still there. Oh, by the way, they say we're going to have a special dividend.
It goes back.
Whose idea was that?
Oh, absolutely.
That was not ABSA's idea. That was Barclays'
No,
idea.
but
And that's where the pressure's
ABSA's
coming
got
from.
an independent board and makes its own decisions. I know that because they told me that. I believe them, even if you don't.
I'm not going to say I disbelieve it.
But it seems entirely likely, doesn't it?
Absolutely, absolutely. And Barclays need the growth that ABSA could possibly bring
absolutely.
to them.
I mean, for Barclays, what a fortuitous acquisition the ABSA deal has been, because it makes up about 20% of their global profits, this little bank here in downtown Joburg. It's been a very good acquisition for Barclays. It's got its issues, but then, of course, Mary Ramos pushing very, very hard for that ABSA, for Barclays deal to be done. This is her first big project as chief executive, David. Is she going to face headwinds? Are shareholders going to say the price is simply too high for lots of Pan-African risk?
I think that a lot of analysts now are calling for a mixture of cash, as Ian has said, and shares. And I think she'll probably get it through. She'll get the vote through, but not as easily as she thought. I think there's going to be a lot of opposition to the dilutory effects of this deal. And the other thing is that you've now got to weigh up, is it the best Africa player or First Rand or Standard? Standard seems to have a lot more exposure, and probably
nobody's really making any money out of the African continent in banking yet, and Standard Bank's been doing it since Conrad Strauss's days.
I don't think you're going to make money out of banking in the future. The regulators are onto them. All the highly geared plays that we saw over the last 2 decades are out. You can see every day big banks laying off people, cutting down their, the size of them, of their enterprises. So I think banking is going to be exactly what it used to be, just boring.
I hope it's boring.
Yes.
I look at what's happened to ABSA's credit card book. And this thing has exploded. They're treating this like a micro-lending, Merry Christmas, all Hanukkah, all thrown into one.
Yes, but there's a point there. A part of that is the taking on of the
acquisition of Edgar's
book. And there's a good point there that Maria Ramos made. She said, in Edcon's book, people have bought goods. In lending, just personal loans. There are no goods involved.
There's still a debt that has to be serviced regardless of what you bought, and you can't repossess a T-shirt and some underpants.
The Edgar's account may be paid off first because people are going to need more clothes.
Sure.
So I think that
maybe.
that could be one
Maybe.
good point. Better than the unsecured lending.
Yeah, most certainly better than unsecured lending. Okay, then Comair. I mean, you're not a fan of the airlines. Great utility. You need them because you travel around the world all the time, David. Here's Comair, which comes out with improved profit growth. Nice to see, courtesy of the fact that One Time no longer exists, so they're benefiting from that. They've managed to keep their ticket prices up, and with SAA falling over its own feet and having foot and mouth disease on a daily basis, it's got to count in favour of Comair.
It is in favour, but it's such a volatile industry. You know, you can't get a smooth curve through their earnings. You know, it's all over the place. Oil price goes up, rand goes in another direction, and so on. And we go into recession, we slow down. So if you want to get into airlines, you've got to have the appetite to get it. I suppose it's one of those shares you buy when it's bombed out and just go for the ride.
It was bombed out at 135 cents. Nobody wanted to buy it then. It's trading close to R2 now. You would have made a nice return in a very thinly traded stock as a private investor. But do you take your money at $2 and wait for it to go back to 135 again?
Yeah, it's a trading stock.
Yes.
I fear so. Group 5, you mentioned it earlier.
Yeah.
What a fabulous turnaround for Group 5, but is it a sustainable turnaround for Group 5?
I think so. They've exited it from some of the worst situations they have, certainly their Middle East and Gulf projects. They've actually had fire sales to get rid of those projects, and they did say at their presentation to the analysts just a day ago that this was almost through. They're not going to realize a whole heap of cash, but it takes some of the risk away. However, what is left is going to be relatively low margin. Yes, they've hopefully secure from the payment point of view, but once again, they also mentioned, where's the South African infrastructure development program? We're not seeing it. We haven't been called for tenders yet, and that is a problem. It's a familiar story, isn't it? And
the biggest problem, and you can't ignore it, is that these chaps sat round a table and divvied up projects, and they're not going to get away with it.
And nobody trusts them anymore, and that's the trouble. So you got the big construction companies say, we need government to start divvying out contracts. Well, hold on a second, government doesn't trust you anymore. Guess what? So
they're going to get a big slap on the wrist. And no one knows how much that's going to be. And I think, why buy them with this overhang? You know, wait.
So Wilson Bailey Homes, we scratch off the list as well because there's so much else to do.
There's no rush.
No, there's absolutely no
just wait. You know, there's no rush until the Competition Commission comes out and this is sorted, and you know, we can then decide. Also, we want to see the money that Zuma has to produce. You know what's strange? If you listen to Obama, he said, you know, we're going to spend $50 billion on infrastructure. That's $450 billion. That's half of ours.
Yes.
And they're getting all excited about it. It's just hardly anything.
The difference is theirs might happen. Is the super gap back in Super Group? Is the super
I like it. I like it. I think that it's a company we're going to have to take a lot closer look at. The easy money's been made, but I think even so, I love you know, some of the clients that come and see us, and I always say this, they come in, they look like farmers, and I say, where do you get your money? Transport. It's a big money spinner. There's big margins in actually trading goods, and I think that as Africa expands, you know, there are no railway lines, everything has to be done by road, and I think hauling, even in South Africa, is a very high margin business. So I like logistics, and I think they're very well placed.
It has to be a high margin business. If you think of the challenges that they meet at every border post, they're kilometres long queues, and you know, South Africa is also guilty, but the other countries are even more guilty, and this is really
I think Beitbridge is our fault. It's a Beitbridge fault.
I'm sure it is.
When you look at it.
But once again, having listened to their management, they've done a wonderful turnaround. The big change has happened.
Yeah.
It's not going to happen at the same pace anymore.
It's a good theme, logistics, very good theme.
It's a nice theme. Now, a theme that you warned us about last week, David, and you said you were worried about food manufacturers. Tiger Brands came out with quite a vague trading update earlier on this week, in which it said, our costs are rising, there's inflation, and we've got lots of competition, and that's not fair.
I don't think that's vague. I think that's scary.
It's scary, but there weren't any numbers associated with it.
No, but you can imagine the numbers.
Yeah.
But that's the point. Can project the numbers.
The numbers are so bad that I don't even prepare to publish them.
I agree, and I think that's what worried me, is that I was watching the share price going up, and I said, where have I got this wrong? You know, is my thinking wrong? And I think that we're going to come out with a surprise on the downside rather than on the upside. And I even hear this Dangote is as they said in that statement, that it's dilutive. So it's going to take a long time for the Africa story, which I think is the reason that foreigners have been coming in. They're buying this Africa story. But you said it with the banks, I still think it's some time away.
I wrote a piece for Finweek last year, which some people sniggered at, and I said, look, people are buying the Africa story as if it's going to happen next week. This is a 20-year plan. Anybody investing for Africa right now has got to be prepared to wait for 20 years to get any substantial return, and that's pending any disasters along the way as well. Assuming everything goes up in a straight line, you're waiting a long time for your money.
I looked at City Lodge. It's the perfect company to transport into Africa. In other words, to replicate in Africa. Low cost. When I say low cost, very good value hospitality, and they can do that. They can replicate the model here, but it's going to take time.
But they do it so much more conservatively than, for example, Arthur Gillis, who goes in with 6 guns and basically will put his brand onto somebody else's building and grow the project group within the continent. And then you've got Clifford Ross saying, you must be joking. We build our own properties, and that might they only do 2 or 3 a year, but slow and steady.
Slow. So you can't buy it. You can't buy it in the price yet.
No.
But look what breweries have done in Africa and in other emerging markets. It can be done, but it takes experience, huge capital, and time. But
and huge volumes of something that somebody wants. And beer's the right commodity for that.
And the distribution model.
Yes.
That's most important of all, which comes down to your point about logistics being so important, I think.
Good point.
But that is it. So learn from breweries. Tiger Foods say that this is what they aim to do. Time will tell.